Yo, what's good, everybody? So I just wanted to come on here real quick and talk about the tariffs that's been going on recently, and how you could basically come out of all of this shitty price action market that and the sell-off that we've had, how to come out with it profitable. So let me just break it down real quick. Everyone's been hearing this specific word, tariffs. Excuse me, just burped. Um, there's been panic, but honestly, the biggest truth is that this can actually be a really really good thing for our American economy. All these tariffs are put into place to protect U.S. industries by making a bunch of foreign goods more expensive. So like all the goods that are coming outside of the United States, pumping up the price for them, which basically raises the demand for like domestically produced products. So basically anything that's being produced inside of the United States to make it cheaper and more convenient for for demand inside of our own country. So basically it means that there's going to be more jobs, stronger supply chains, and just like a long-term economic independence, which basically just helps our country become a lot more independent when it comes to using other countries for resources. Obviously, recently, if you've been looking at the market, it has not been liking it. There's been a lot of uncertainty. All the big banks, all the big hedge funds, investors, they're selling off because of how much volatility there is within the market. There's so much fear. If you look at like CNN.com or like CNNbusiness.com, whatever, and you look at like the fear index, we are at extreme fear right now. So there's like a bunch of sell-offs going on right now. Just a quick disclaimer when I do get into this, I'm not a financial advisor, and this is not investment advice. I'm just explaining to you guys what I'm thinking and how I'm pushing my position, and personally what I'm going to be investing once we get that pullback for the trade war. So let's talk about strategy. So tariffs hit, costs go up, investors get super nervous, and then all of a sudden, boom, everything just drops to the downside. All right, so not all drops are bad. Some of them are literally just emotional reactions, and those are ones that I'm looking to buy into. So I'm going to kind of talk about five specific companies and why I'm going to invest in them. And then also a cool thing about some of these ones that I'm actually going to invest in have dividends in them. And if you don't know what a dividend is, so basically it's a small percentage of what you own. They pay you back every quarter. So like let's just say for example, I invested in like Tesla. Okay, I don't know if they actually have dividends or not, but basically, let's just say it's like a 10% dividend. And I put $100 into it. Every 4 months, they're going to pay me $10 just because I have their stock and I'm holding it for so long. Okay, so that if you don't understand that, you could look it up. Whatever. Very very simple, really easy to understand. So the number one company that I'm going to be looking into, and I have five different ones that I really have, like for sure that I will be buying. And I have them in five different sections. So one of them is going to be with like supply. Another one's going to be with defense. Another one's going to be with technology, and then industrial, and then just like financial in general. Okay, so the first one that I'm going to be talking about is going to be the supply. So Costco is my number one pick that I'm going to be buying into. It is, if you don't know what Costco is, if you're not from America, I don't know if they have it in other countries. If you know what Costco is, huge grocery store that they had just have um, in bulk. So they sell everything in bulk. Um, and obviously it's a lot cheaper compared to any other places. And like they've got a lot lower pricing compared to, like big chain Walmart, Target, whatever. And I feel like as time goes on, we're going to see a lot more people going into there, getting memberships, which then drives up the revenue for their brand, for their company. In turn, basically bringing in more money to their company. With lower prices, they have that advantage compared to other companies. So that's the number one place that I'm really going to be buying into, and they do have a dividend as well. So every quarter, I'm going to be getting about 0.55%, which is pretty low compared to what I have in my in my entire portfolio, which is pretty low. But either way, it's not zero, which is fine. So the next section I'm going to be looking into is Lockheed Martin. Obviously defense. With the times that we have right now, we have super uncertain times. Trade wars heating up. So same goes for geopolitical tensions. Um, Basically, government increases defense spending. We're going to see a lot more money going into our defense contracts and stuff like that. Trump canceled a lot of like the bullshit government facilities that we don't need. So like all the institutions that we don't need, and a lot of that money is just going to get reinvested back into defense contracts, back into our military. So Lockheed Martin is my second pick. It's a well-rounded company. They have a 2.7% dividend yield, which is very very nice. Um, I'm waiting for basically the way I'm doing this, the way I'm going to start buying in. So I'm going to wait another week or two, depending on what the news is, and I'm going to start buying in instantly. I have been slowly buying into these, just not like my full position that I want to be holding in them to. Um, that's basically how I'm going about it. So the next one is going to be Apple. Um, and Apple is they have overseas production, like they are mainly depending on China, but a lot of them, all of like the manufacturing places that they have for Apple are moving into India, Vietnam, and like a bunch of South Asia countries for cheap labor, obviously. And obviously, I mean, I already have a lot of Apple. I really like the Apple products. I mean, I got an iPhone, I got an Apple Watch, AirPods, whatever. Um, they do have a dividend yield as well. They have a 0.5% dividend yield. Um, it's obviously not a small, it's not that big of a yield, but on the upside, once the panic clears, I feel like this will be a very, very strong stock. They are introducing, I just saw it on the news today, they are introducing a lot of new factories uh, into the United States. Another big company I'm going to be looking into as well, in the tech area. I don't even know if you could call this like the tech area, but is going to be Tesla. Okay, if you guys don't know about Tesla, you're missing out because this is a very very strong stock. I don't know if they have a dividend yield. Let me look it up real quick. Tesla dividend. Okay, so they unfortunately do not have a dividend yield, but I already have lots of money saved up into Tesla, which I'm just going to continue to keep on adding and stocking into it. Tesla is just an obvious one. It's American to manufacture, great company. Same thing with Ford. I'm also going to be buying into a lot of Ford. I already have a small portion of my portfolio filled up with Ford. I don't think they have a dividend. Let's just check dividends. It looks like they do. They have a 6.5% dividend yield, which is pretty nice. But yeah, so moving on, and moving into industrial, I'm going to be buying into Caterpillar. So if you guys don't know what Caterpillar is, they have huge machinery that builds industrial things, bunch of stuff like that. Um, it's infrastructure. It's never going to die out. It's always going to be continuing. Everything's going to be growing. There's roads that are going to be built. Houses are going to be built. Things are going to get torn down. All these manufacturers are building, are everyone's using CAT. Like if you just drive down the road and you see that there's construction on the side of the road, 9 times out of 10 you're going to see a Caterpillar, um, you know, Bobcat, fucking whatever it is. You're going to see it all the time. All right, so this is one of the companies I'm also going to be buying into. They do have a small dividend yield with a 1.6%. I just feel like it's an amazing company. It's an American company. I don't know where they built all their things, but still American company. Great. Now, one of the last things I'm also going to be buying into, kind of going back to like the tech area, is Nvidia. So I bought into Nvidia very, very early, which I'm super grateful for. Um, I have been a long-term holder of Nvidia. I've bought in about 2 years ago, which is super, super grateful for. I've had a crazy amount of return, and this is the time where I'm going to be buying up even more. If you guys don't know about Nvidia, um, excuse me, they had a absolutely absurd um, introduction into the United States. They've had pretty much everything technology uses NVIDIA. Okay, they make processors, they make motherboards for computers and stuff like that. Just perfect company to invest in. That's like my main like inside of my portfolio. I think I probably have like a quarter of just like strictly NVIDIA. So I'm going to be continuing to buy into that. And let me see if they have a dividend. Fuck. They have okay, so a very, very small dividend yield. They have a 0.04 dividend yield, but either way, I'm still going to be continuing to buying in. So now into the last section that I have is going to be JP Morgan. It's a bank, okay? The biggest bank in the United States of America. They literally have like a fortress, okay? You could drive down the road in your own hometown, and I'm sure you could see a Chase Bank over there. Great leadership. They have benefits for higher interest rates and stuff like that. Obviously, American company. And um, once the economy rebounds, I feel like J.P. Morgan will definitely rebound a lot faster. They do have a small dividend yield. It's a 2.4%. And that's really all I have for you guys. Tariffs might be like the headlines and sound kind of scary, but they're actually creating like a very good long-term opportunities for strong American companies. All you got to do is just know how to adapt and lead from there. And like I said earlier, I'm not just going to just like throw all my money into it just because there's fear in the market and I'm just gonna buy the dip. I'm waiting for a good looking setup. Waiting for like a higher time frame imbalances. So like within like a daily time frame or a weekly time frame, I'm gonna look for more liquidity sweeps. And then I'm just gonna put a bunch of money in, and obviously I'm not gonna dump everything into those that I just named. I'm gonna start looking into some more other ones within those sectors because I feel like those are just like the top 5 perfect sectors that we need. Obviously, financial, we need them. Infrastructure, we need them. Manufacturing, supply, all that kind of stuff. Those are the top ones that we're definitely going to need, and especially defense as well. It's a huge one in our American economy. So I hope you guys enjoyed this video. If you learned something new, let me know in the comments. I have a whole Discord where I talk about trading. I give trade call outs, all that kind of stuff. Do one-on-one mentorship, and the link is in the description of this video, and it is completely for free to join. If you want to join that, it's in there for free. All right. Well, I'll see you guys in the next video. Peace out.